Eric Muad with Muad.com with the U.S. market analysis for the weekend of September 3rd and September 4th, 2015. Take a look at how markets closed on Friday. Dow was up 1.2%, NASDAQ 1.7% to the upside, S&P 500 was up 1.43%. But I think the big story for the day was at some point that in the pre-market, at some point I believe the Dow was up, I think 100 points, and after the open, the market was down at some point with the Dow down 250 points. So given all this volatility, only to close up 200 points. So that's the story. So the numbers sometimes don't tell the full story. Take a look at crude oil, which was up 2%. We see that the VIX was down about 7%. So let's take a look at the charts. Let's begin by taking a look at the NASDAQ monthly. So the key in the coming weeks and in the coming months or so is how the market responds to this level here around the 50. If the NASDAQ can hold above the 50 on its monthly chart, that's going to be good enough to stem the recent slide. In fact, if you go back to about the last 10 years or so, you'll notice that the market has been bouncing off the 50 on the NASDAQ, pretty much in other markets, for nice moves higher. And so that's the key, is what happens. You can also see here in 2010, 2011, the market did bounce off those 50 levels. So that's the key. Holding above that level and staying in the green for the month is good. Otherwise, if we continue making fresh 3-year lows on the RSI, on the MAC, and on the MACD, that is when we start turning bearish again. What I'm saying here is that there's a slight improvement in the way the markets are behaving. Yes, it's very early on in the month to make very strong conclusions, but at this rate, as long as the market can build and be positive for the month, one can start looking at the idea that the market might actually bounce. On the NASDAQ weekly, the line we've been watching for potential weekly support continues to be positive. As you can see, coming off the lows of 2012, the market moved on to new highs. We bounced on the line there or close to it. We bounced on the line here perfectly for those lows, and now we might be forming a triple bottom on this green line. Anything showing an improvement here would suggest that one can expect the market to recover. Otherwise, if we can't hold that green line and crack below it, then the market is still in trouble. Let's take a look at the NASDAQ daily. And coming off the lows of last year, October, we can see that the RSI moved above this level here. And so if we draw a line there for our uniformity analysis, we can clearly see that the market, every time it bounced on the line, we had a short-term low without fail. And also recently, double bottom support here in July for a move to new highs there. And here we went below the line and back above it with uniform activity, which is good, surprisingly. And here we are seeing that the market also held below the line and back above it with uniform activity. So generally speaking, that's good action. It might indicate that over time prices should look to go higher. The one thing that the market is eventually going to have to contend with is resistance on the top side of the daily RSI, but that's for later. For now, there's a little bit of an improvement in the way the markets were looking, in my opinion. Now keep in mind, we came and tested the daily closing low here and held. So this daily closing low held. The market didn't close below that. That's good. And so that test, and while that test was taking place, the market was improving its RSI action, which is also, surprise, surprise, an indication of a market that is not that bad. Yes, we've come off the highs, and yes, eventually we might come and break that support or that recent August closing low. Yes, we might break all those things. But for now, without knowing what Monday and next week is going to bring, or next month, this looks good short term in terms of generally stopping the recent drop in the market. Now, having said all those good things about the market, there's a little bit of a problem here on the hourly. If you take a look at the recent break here on 21st here of last month and just draw a line off there, you can see that the market has had a tough time staying above 50 on the hourly. So until it can move above 50, maybe this two-day move where the market looks like it is going to be positive for October is just a trap. So yes, it looked good and looks good on some of the other charts, but on this chart here there's a lot of resistance, so the market needs to clear that before it can move higher. Also on the 30-minute chart for the NASDAQ, and again remember I'm using RSI period of 26, so if your charts look different, it's because I'm using RSI period of 26. But pretty much you can see here that there was a recent break, and that break on the 30-minute chart did bring the market off short-term highs there, and so we can draw a line from there, and we see that it is coming back. And as of right now, I'm recording this with about 50 minutes to go before the market close on Friday. So you can see here that if this is confirmed as resistance short term, the market struggles. Right now, just so that I don't confuse anybody, we're trading here with about 50 minutes to go on Friday. And so we'll see how the market is going to close. But you can see that on the 30-minute chart, it is coming back to test this line of resistance right here, and that stems from the recent break of that level there. So if this is confirmed as resistance short term, maybe we don't close as high as we are trading right now on the NASDAQ. Just like the NASDAQ, take a look at the monthly chart for the Dow over the last couple of years. In fact, as far back as you want to go, when the markets find support on the 50, it generally tends to mean that they are going to be making new highs. And so even the Dow here might have a chance over the next couple of months to move back above 50 with uniform activity. If it does, that's going to be good. Now, let's keep in mind that if it fails, if the market fails to be positive for this month, then the risk that we've been facing the last couple of months comes back into play, because we are looking at the MACDs trading at 3-year highs, which is very bearish. That's not good. And so both MACDs at 3-year lows on the MACDs, and also the fact that the RSI on the monthly would still be at 3-year lows. So be aware that if the market can't hold on to the monthly gains, and if it turns down, we are still going to be in an environment where markets are going to be trading to the downside. And I guess what I'm trying to say is that as long as the market is positive for the month, it's going to be tough to make money shorting the market. As long as the market is down for the month, it's going to be tough to make money on the long side. For this week, we see that the market did hold on to the lows on the Dow, did not move to fresh weekly closing lows. So that's good. So that test was successful and the market held. So if you're looking for reasons to at least start looking for the market to move higher, that's one. That's one good reason. The market held the previous weekly closing lows. If you take a look at the daily chart for the Dow, you can see that it needs to eventually clear this line of resistance on the daily RSI. If it can jump above that line, that's going to be very good. Otherwise, if this line again becomes resistance, so if you're a bull, you'd like the market to clear that blue line. And if you have bearish positions or we'd like to see the market go down, it needs to show resistance on the line there and then drop. So since the market has come back to test that blue line, tough to tell which way the market wants to go. So let me draw that blue line again, the line connecting recent RSI highs. Anything above that is bullish for the market. Anything showing resistance and down is bearish. If we take a look at the hourly chart for the Dow, right now trading at the highs of the session with about 45 minutes to go, take a look at where it's trading at on the hourly. It's coming back to test this recent breakpoint. This breakpoint here, right there, was the one that brought this sell-off here. Market has been lower since, so we draw a line from there, and we can see that that is where the market is right now testing. If it shows resistance here on an hour-to-hour basis, expect a pullback. Otherwise, if the market is to move higher, now is when it needs to clear that line of resistance. If we take a look at a 5-year weekly chart for the S&P 500, we again see that the market is successfully holding this level here. And this level is where the market made lows in 2011. Once the RSI moved above that level, the market has gone on to record a nice run. And since then, the green line has been where the market has been finding support and giving investors a buy signal. Even recently here, late 2014 for those lows. And as of right now, we are seeing a good attempt to move back above that green line. If the market can move above that green line, that's good enough. Otherwise, if it cannot move above that green line and if it stalls and stays below the green line, that's going to be bearish. For now, it looks like the market is doing its best to hold, which is a good sign. Take a look at the monthly chart for the S&P 500. As of this minute, the market is bouncing back above 50 on the S&P 500. That's very good indication of intention. At this rate, as long as the market is positive for the month, one can expect that prices are going to recover in most sectors and stocks, especially the ones that have been down. Take a look at support here. In 2011, the market found nice lows, went on to record new highs over time. So as long as the market is positive and showing support on the monthly on the S&P 500, and that support is coming exactly at the 50 line on the RSI, that is good indication enough, in my opinion, that the market surprisingly could actually start moving higher. Unless, and I have to repeat that, it's very early on in the month, unless this is all fake in the beginning of the month of October, and that finally by the end of the month we are going to be still trading down. As long as we are holding above 50, that's good, but if we continue and stay down for the month, that's going to be bearish. And why would it be bearish if the market turns down for the month? Is because if the market is down for the month, let me show you the monthly charts here. Should the market turn down for the month, we are still looking at the MACD trading at fresh 3-year lows. And if the market turns down for the month, we would be trading at fresh 3-year lows. So that's the risk. A positive market this month is good. A down market would suggest 3-year lows, which would be bearish, would be going back to the way the market has been trading, which is down over the last 2-3 months. We are seeing here, with about half an hour to go, market trading nicely at the highs of the day. Let me show that so we can have a perspective of what's going on. Dow at the highs of the day up 140. So the markets are trading at the highs of the day. Let's take a look at the charts here as we come to the end of the week, and we can see that as of right now we are still testing the previous break. So it might be that this is just market playing tricks as we go into the end of the week, that at this rate, if this is confirmed resistance in the new week, you should expect the new week to begin with the market pointing down. Otherwise, for the market to truly be in a recovery mode, it needs to be breaking out above the recent RSI break level there. If we take a look at the Apple monthly chart as we begin the new month here, second trading session, you can see that this breakout in the RSI on the monthly began this nice move. The market would go on to record very nice move in the coming weeks after that nice breakout here. So we can draw a line from here, and you can see that right now the market is doing its best to hold this line on the monthly. As long as that's the case, and as long as Apple is also positive for the month, I would suggest around here the stock is also stabilizing. Why? Because it is testing the previous successful breakout on the monthly RSI, and that breakout could be actually right now being successfully tested. And as long as that's the case, one can expect that Apple recovers also at current levels. If you take a look at the daily chart, clearly there's a lot of work that needs to be done. Take a look at this nice bullish phase here So this phase here was very successful, and it's because the RSI did break out here. So you can see the next RSI breakout is months and months away. So I think what I can say here is that generally speaking, stocks should be stuck in a sideways action here between 110 and 120 for quite some time, until at some point it can clear that line of resistance on the daily RSI. So the key for this market, in my opinion, is the long-term picture, which if the Dow can move back above 50 in the coming weeks, in the coming months, that's going to be all that bulls need to see. Anything back above 50 is going to be very bullish. If not, if the market turns down for the month, that's bearish, very bearish. Take a look at the S&P 500 right now. It's giving us the classic bounce on the 50. As long as that's the case, that's a market that could move higher. If it turns down for the month, then maybe we can then again turn bearish. Right now, it's showing us support where it needs to, and also on the NASDAQ, we see that it is holding above the 50. At this rate, that's good enough support. At some point in the month, if we crack, and it's a big if the market turns down, is when you should start looking to turn bearish. Right now, this market, in my opinion, is starting to show support where it needs to, and if that's the case, it could actually bounce. Eric Mwathe, mwathe.com. Enjoy your weekend. Good luck, peace, and blessings. EACS. See you guys. I am out. Woo! Yeah. Woo! Yeah. Woo! Yeah. 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 Yeah.